Hello everyone, I hope you all are doing fine. And in this video, we will be discussing about a detailed breakdown on the fund flow statements. So basically, a fund flow statement is a financial statement that provides details about the sources and the uses of the funds in the company over a specific accounting period. Unlike the cash flow statement, which focuses solely on the cash transactions, the fund flow statement examines the changes in the overall financial position, particularly in the working capital and the long term funding. So, when we talk about that term fund flow statement, a fund flow statement is talking about the changes in the financial position. And which thing analyzes the financial position of a company? It is the balance sheet. So, in other terms, it is sorting the changes in the balance sheet of the company. Okay. Unlike the cash flow statement. Why? Because cash flow statement only focuses on the cash transaction, but fund flow always identifies the overall financial position. And particularly in the working capital and the long term funding. Okay. When talking about the detailed breakdown, we should also keep in mind that it always analyzes the financial position over a specific accounting period. Okay. And it deals with the sources and the uses of the funds. Here, let us just define the fund flow statement. So, a fund flow statement tracks the movements within the company. So, they are saying that the fund flow statement tracks the movements of the fund within a company. Basically, it identifies that where from the money can be arranged, that is the sources. Where from the money can be arranged. I should not write the word money here. Where from the funds can be arranged and uses. Where can we utilize the sourced funds? Okay. Fund flow is a broader concept than the cash flow, since it identifies all the domains and cover a vast area. Okay. Next up, what is the purpose of the fund flow statement? The main purpose of the fund flow statement is to analyze the changes in the company's financial position between the two balance sheets. So basically a comparative analysis between the balance sheets of a company at two specific dates. Also to identify the sources of the fund and the uses of the fund. Identify the sources and uses of the funds. Other than that, it also helps the management and the stakeholders to understand the company's financial strategy, investment activities, and the financial state. So basically, it is helpful for the management and the key stakeholders to understand what company's financial strategy, investment activities, and the financial stability. Okay. So this is what the main purpose of the fund flow statement is. Moving ahead further, let us talk about the main components of the fund flow statement. Main components of the fund flow statement. The main components of the fund flow statements include, firstly, is the issue of the shares and debentures. Issue of the shares and debentures. Funds are raised by issuing the equity shares or the debentures. It is a part of the sources of the fund. We are here talking about the sources of the funds. Which includes the issue of the share and debentures, and the shares are issued so that the fund would be raised. Next up is the borrowings. In the case of the borrowings, the long-term loans taken from the financial institutions or banks. Okay, this is also a source of the fund. Next up is the sale of fixed assets. Any money generated from the selling of the fixed assets will come under the head of sale of fixed assets. So basically, the funds generated from selling the fixed assets like land, from a building, or machinery. Then non-operating incomes. The non-operating income include the one-time income like dividend received, interest income, and gains from the sale of investments. Also, it also identifies if there is a decrease in a working capital. This is also considered as the source of the fund. Reduction in the current assets and increase in the current liabilities, leading to the release of the funds. So, in the bird's eye view, it is found that the sources of the fund include the issue of the share and the debentures, the borrowings, the non-operating incomes, and the decrease in the working capital along with the sale of the fixed assets. This is the one aspect of the fund flow statement, that is the sources. Now we shall talk about the another aspect which is as important as the sources, which is the uses of the funds. For uses of the funds, the following criteria or the following heads are there from where the uses can be generated or the sources can be used for the fund flow. Number one is the purchase of fixed assets. We can utilize the sourced money to buy the fixed asset, investing in the long term assets like property, plant, and equipment. Then, repayment of loans. We can use the sourced money to repay the loans. Paying off long-term borrowings or debentures. After that, payment of the dividends. Distribution of profits to the shareholder. You can utilize that money for distribution of the profits to the shareholders. Then is the non-operating expenses. One-time expenses like losses from the sale of investment or the extraordinary expenses. Okay, and next we can utilize these funds for increasing our working capital. Now, how this will happen? If we increase the current assets or we decrease the current liabilities using these funds, which will lead to the use of the funds. Okay. So we can use the sourced money for the purchase of the fixed assets, for the repayment of the loans, for the payment of the dividends, for the non-operating expenses, for the extraordinary expenses, and for the increasing our working capital. So these are the two heads of the fund flow statement, that is the sources of the funds and the uses of the funds. Now let us talk about how to prepare the fund flow statements. Preparation of the fund flow statements. The preparation of the fund flow statement includes the following steps. Number one, preparation of the statement of changes in working capital. Preparation of the statement of changes in working capital. This statement compares the current assets and the current liabilities of the company at the beginning and the end of the accounting period to determine the changes in the working capital. So it is basically a comparison of current assets and current liabilities over the beginning and ending of an accounting of, a, of an accounting period. Now, let us consider an example, that is ABC Limited, and we need to prepare a statement of changes in the working capital. We'll do it right away. It is just a basic example just to give you the general knowledge of how this works. First of all, particulars. First of all, we should name it ABC Limited and statement of changes in the working capital for the year ended 31st March. Let us suppose we are talking about the 2020 or 24. Hence, first of all, particulars. After that, PY, that is the previous year. After that, CY, that is the current year. And after that, changes. Okay. And this is it. Now we'll put on the value. First of all, the current assets. The current assets will include the inventory. The current assets will include the accounts receivable. The current assets will include the cash. So, the total current assets. Okay. In the previous year, the inventory is 1 lakh. In the current year, the inventory is 1,50,000. That means there is a change of 50,000. And the inventory has increased from 1 lakh to 1,50,000. That means this is an increase and it is favorable. Then accounts receivable, that means my debtors. It was 2 lakh in the previous year, but it is 1,80,000 in the current year. That means my debtors have decreased. This is a decrease of 20,000, which is unfavorable. Then we shall talk about cash. The cash in the previous year was rupees 50,000. However, the cash in the current year is rupees 70,000. That means there is an increase of 30,000. Favorable. Summing it up, we have the total assets in the previous year as 3,50,000. We have the total assets in the current year as 4 lakhs. That means there have been an increase of 50,000 in the current assets for the current year, which is unfavorable. That is why we will denote it from I. Okay. Now, let us talk about the Liability side, that is current liabilities. Talking about the current liabilities, we have that the current liabilities में सबसे पहला head is accounts payable. After that, we have the short-term loans, and after that, we have the total current liability. Okay. Let us just inch it one way back so that it can be fitted accordingly, otherwise the formatting is getting affected. And this. So we have the total of the current liabilities. Here, the accounts payable is 80,000 in the current year and 90,000 in the previous year. Sorry, 80,000 in the previous year and 90,000 in the current year, making it 10,000 increase. For the short-term loans, again 70,000 in the previous year and 60,000 in the current year. That means a decrease of 10,000. So for the total current liabilities, we have the total current liabilities of 1,50,000 in the previous year and the same 1,50,000 in the current year, resulting no change in the total current liabilities. That means the working capital will be current assets minus current liabilities. 3,50,000 minus 1,50,000 for the previous year, that makes it 2 lakhs. Similarly, 4 lakh minus 1,50,000, that makes it how much? 2,50,000. Okay. So the resultant change will be equivalent to 50,000 increase. Now, this is how the statement of working capital or the changes in the working capital are reflected in the books of the accounts by using the fund flow statement technique. Here, we will now calculate the fund from the operations. We will here now calculate the fund from the operations. This step adjusts the net income for the non-cash items like the depreciation, amortization, and gains or losses for the sale of the assets to determine the funds generated from the operations. Okay. So, next step is the preparation or the calculation of funds from operations. Okay. What will happen in here? Adjustments of the net income for the non-cash items like the depreciation, amortization, and gains for losses from the sale of assets. Okay, so let us just try. Here, we will calculate the fund from operation. These are all the hypothetical figures just to make you aware of the format. That is why they are used. So calculation of funds from operations. Calculation of funds from operations. So first of all, we'll calculate the net income. That is rupees 1 lakh. That is rupees 1 lakh. After that, we will add on the depreciation. Depreciation is rupees 30,000. After that, we will add if there is any loss on the sale of investment. Any loss on the sale of the investment. It will be added investment or equipment. So we have a loss of rupees 5,000. We will add that. And if there is any gain, we will subtract. So gain on the sale of investments. Gain is rupees 10,000, so we will subtract the 10,000, which will give us the fund from operations. Let's calculate the 1,000 plus 30,000 plus 5,000 minus 10,000. The resultant will be rupees 1,25,000. Sorry, 1,25,000. Making our fund from operations as rupees 1,25,000. Okay. Then in the end, we'll prepare the final fund flow statement. Now, how will we prepare that? And what is the fund flow statement? You are aware about the calculation of the funds from operation. You are aware about the preparation of the fund flow statement by making the changes in the working capital and by making the funds from operation. Now the final step is preparing the fund flow statement. Preparing the fund flow statements. Here, let us just assume that ABC Limited let us just assume that the ABC Limited have to prepare the fund flow statement for the year ended 31st December 2023. First, we will talk about the sources of the funds, then the uses of the funds, and then the net changes in the working capital. Okay. So number one is particulars. And then is the amount. So first of all, sources of funds. Sources of funds include the fund from operations, sale of fixed assets, issue of the shares, decrease in the accounts receivable, which will give us what? Total sources of funds. Then we will talk about the uses of funds. But before that, let us just fill in the amounts. Let us assume that we have rupees 1,25,000 as the funds from operation which we calculated above. Okay. Then the sale of the fixed assets. We have the sale of the fixed assets as rupees 50,000. After that, we issued the shares of rupees 2 lakhs. We have a decrease in the accounts receivable as rupees 20,000, which was also reflected in here. Which makes our total sources of funds as 3,95,000. Okay. Then sources of funds have been done. Now it is time for uses of funds. Purchase of fixed assets. Redemption of debentures. Payment of dividends. Increase in inventory. Total uses of funds. Which will give me my net working capital. Let's first fill up the purchase of fixed asset. We purchased the fixed asset of rupees 1 lakh. We redeemed the debentures of rupees 50,000. We made the payment to the dividends for rupees 75,000. We increased the inventory by 50,000. We also have one more head, that is the increase in cash. So our cash was increased by 20,000, making the total uses of funds as 2,95,000. Now, net changes in the working capital. Net changes in the working capital will be rupees 1 lakh positive because funds minus uses. It is what? It is the funds minus the uses. Let us close our entries. So this is now let us talk about some of the benefits of the fund flow state. It is used for the long-term planning, identifying performance evaluation, supporting the credit decisions, and so on. So I hope you have understood the video. Thank you so much.